Hey, what's up? This is Zack here at the Genzio Media House, day 2 with Tom. Tom, I'm just going to let you introduce yourself.
Thank you, Zack. Tom Dunleavy, CIO of MV Capital, former senior analyst Messari, and 10 years in TradFi and trying to reform every day by getting deeper down the crypto rabbit hole.
So, okay, let's start at the beginning here. Can you tell us about kind of maybe your path from traditional fi, if you TradFi for those watching, and how you kind of ended up here today? Like, where were you working in TradFi?
Yeah, so I was in investment management working for State Street Global Advisors, one of the biggest ETF providers in the world. Very much, analytical, analyzing bonds every day, building portfolios around those. Did that for 7 years, and then subsequently worked as a large institutional investment consultant manager. So that's building portfolios for pensions, endowments, foundations, big pools of capital, hundreds of millions into the billions of dollars. For those guys, the battle is we need to make an expected return of 7-8% over very long periods of time to pay out pensioners and folks like that. To do so, you've probably heard about the 60-40 portfolio. So 60% equities, 40% bonds. Over time, that's produced a really consistent stream of returns. Whether or not it'll do so in the future is up for debate. But at the time, it's hard to remember, but interest rates for that 40% segment of the portfolio were returning like 0 to 1% in the low interest rate environment we're in. So if you're going to build a portfolio like that, you needed to leg out on the risk curve for equities. And this is when everyone started really doubling down on private equity and folks started exploring crypto. So 2017, 2018, for that cycle, you saw a lot of TradFi folks even explore crypto through that light. So I started exploring it, started writing about it, researching it, investing in it personally.
What was your first crypto investment?
I actually bought GBTC actually as my first investment through my Fidelity 401k account. And I certainly don't have that anymore. Unfortunately, I wish I did. And then just kind of played around with like some random coins, and then started to do deeper research. And that's when I think this is how a lot of TradFi folks get it. You're like, wow, okay, this Bitcoin thing is, whatever, a store of gold or store of value like gold, et cetera. But it's hard to put a tangible sort of metric on that. So what can you do? You look at Ethereum, you say, okay, there are these things here that are like cash flows. I could assign, some sort of premium to maybe the monetary value of it. Oh, I can think about this as like an internet bond. Like you start to have some, grounding in kind of what this thing is. And you could say, okay, I understand how I can fit it in a portfolio. So, I went down that journey. Crypto market crashed in 2017, 2018, and pension funds and those guys, their investment time horizons are very long, but to get anything new in a portfolio is even longer, especially something that's completely new as an asset class and has, somewhat of a spotty track record to that period. So I've dove down the crypto rabbit hole. I went to work at Messari, senior analyst there, wrote, almost 50 pieces for, I think the broader audience is generally hedge funds, VCs, others, wrote about specific projects, chatted with teams, and really wanted to, after doing that for a little over a year, wanted to get back to the investing side, specifically in crypto, because there are still, despite how long the space has been around now, 10 plus years for Bitcoin, 7 plus years for Ethereum and others, there's an enormous amount of alpha left. By understanding trends, by understanding different segments, by understanding individual assets, and just understanding mechanisms on how things go to market. There's a ton of alpha if you pay attention. It's a very inefficient asset class still. So made my way over to the venture side, and I've been in investing ever since.
What are you investing in?
So today our fund is 30 plus investments dedicated solely in Web3. We're vertical agnostic, and that's very purposeful to, in my mind, it's very early in crypto still to say, hey, we're going to have a dedicated gaming focus or a dedicated infrastructure focus. You could do that, but you naturally just have a very small pool of capital you can really deploy, right? Most seed stage funds, which is where we specialize in, are raising, $2 to $5 million across a range of investors. So if you have a $100 million plus gaming fund, think about how many investments you actually have to make. And you have to do it in a fairly condensed time frame because your fund is probably, maybe a 5 to 7 year fund, but you really only have 2 to 3 years to invest. maybe you're a 10-year fund, and then still you only have 3 to 4 years to invest. So you have to deploy a lot of capital, and it's really hard to do it if you do it in just one vertical today. In the future, that will likely change as crypto becomes broader. So for us, we're looking for best in class, winners for each category. So for gaming, for DeFi, for infrastructure, for L1s, L2s, and try to hit the strike zone of really seed stage valuation, strong team, strong go to market, all the other sort of things that folks are looking at in the space. But really our biggest advantage is, myself and the rest of the team have been in the space for a long time. So we're able to.
It's a long time.
So for me, obviously been exploring since 2017, 2018, but we have 2 folks on our team who were early Bitcoin investors since 2013, deployed not only in Coinbase, Kraken, Circle. For that cycle, we're investors directly in Thorchain, and a bunch of EOS and a bunch of others. So kind of seen a lot of different cycles, have built up a lot of muscle memory on how to evaluate deals in the space. This isn't traditional finance or private equity or venture capital where it's like, okay, we can look back 40 years and say, hey, here's how these things have done over cycles. Here's like the specific metrics you need to explore to find and capture value. You don't really have any of that. And then you have this completely new model of tokens, which is just another fundraising mechanism that you can compare to equities. And we have a life cycle of how long have tokens been around, not that long. So thinking about not only kind of the investment opportunity, but actually the monetization opportunity on the crypto side is just completely new, completely different. And, our advantage again is having folks in the space who have been active investors since 2013 or so, have seen a lot of those things and the evolutions over time to sort of say, this is what has worked and this is what we think is going to continue to work, and have the connections to vet those solutions out for things they may not know, right? Like points is an absolutely brand new meta. You couldn't have seen that whole system coming, but what are points? Points are an even more effective way to bootstrap an ecosystem. Tokens were that in the beginning. Points are a mechanism to eventually distribute tokens, but through points, you can incentivize activity more directly than by having just an ICO or an IDO or an airdrop or whatever, right? And that money is shuffling from the investors and the VCs directly to retail. So, in my opinion, it's great. But that trend is a new one you probably didn't see coming, but you have to be adaptable in the space and paying attention and neurotic, checking for the most recent trends. And we think we've been in the space for a while. We're deep in the zeitgeist and the meta. We think we're really good at that.
So are we over the point now where investors or traditional investors take crypto seriously, or are they still skeptical?
Let me check my phone, see what my parents are texting me. No, crypto is now or Bitcoin's now over 62K today. So I think I was at my in-laws' place, and on Fox News, he has it on all the time because he's a older gentleman, and that's what we do. And it was on the last 3 days. All you could see was like Bitcoin hits this,
I love that.
And Ethereum's right in the bottom of the ticker, and they're talking about it very constructively. You saw it on CNBC. I think it was Morning Joe was railing against Gary Gensler the other day because he wasn't being authentic with his criticism.
Gary Gensler sucks.
Generally, yeah. I don't know what his motives are. Yeah, so I think you're seeing from the traditional media outlets, they're taking it more seriously. You've obviously seen it with institutions like BlackRock and others putting enormous amounts of capital, not only in time and effort to get ETFs to market, but also engage their marketing engines. So that's step one. The next step is actually getting in the hands of financial advisors, putting it in 401ks, and eventually the really big, slow moving pools of capital, who are the folks that I work with at the beginning of the conversation, the pensions, endowments, foundations. Those guys move over long, long periods of time. But
what's a long period of time?
Yeah. So they usually meet quarterly. They set their asset allocations yearly. So they'll say like, I want 60% equities, 40% fixed income. Out of that fixed income slice, let's take 5% and put in commodities. They only redo that annually, most of them. Then they do long range forecasts of like, hey, here's what we think equities are going over 10 years. And let's think about how to move our asset allocation over to sort of a target that we think makes sense over that time frame. So you might meet annually to talk about it, but it might take 4 or 5 years to even get to the allocation you agreed upon 4 or 5 years ago, because their vision is these are perpetual pools of capital that have to pay out indefinitely to pensioners. If you have a state pension, or if you're a plumber, you have a plumber's pension, or if you're an endowment, it really is in perpetuity, right? If you're the Harvard endowment, you're going to pay, you're presumably paying 4 to 5% of your capital annually in perpetuity. So it takes a very long time to move. But the good thing is that when those pools of capital do move, it only takes a very small percentage to be very meaningful for the market. And we've seen that with the Bitcoin ETFs. Like the amount of capital that has come in to Bitcoin has been, number of billions of dollars. But, if you just take 1% of the larger institutional asset base, I mean, we're talking trillions and trillions of dollars. And that's just on the, US side. That's not even to mention sovereign wealth funds and all those folks outside of the US that, also take their time. So summing up, I think we are in a very good place in institutional adoption. But we still have a long way to go.
What is your kind of day-to-day like?
So my day-to-day life is heavily focused on Telegram, Twitter, social media, as I think a lot of us are in the space. We meet with 400, or we analyze over 400 projects quarterly.
And how many people is analyzing those? Like, how many people are on that team that's doing that?
Yeah, so we have a team of about 3 full-time, some satellite resources we share with our parent organization who also analyze deals, help bring in deals. But yeah, 400 deals we look at a high level quarterly, over 1,000 annually, and that could be sort of top of the funnel. Hey, here's a deal that's coming in, and we have a pretty quick funnel for some of this stuff, right? Some of it's just a meme coin or garbage, or doesn't fit with the thesis of a traditional venture fund. Others, because of our strike zone of seed stage focused returns and seed stage focused investments, are just too expensive, right? Like if you get something that comes in like Barachain, like awesome, I might think it's going to do fantastic, but it's worth $1 billion already, or say, or whatever, right? Like the multiple you can get on $1 billion investment versus one you can get on a handful of $20 to $50 million investments are completely different. So it's really analyzing deals in kind of that light. And then you get to the next level and you start to break down, okay, this deal looks interesting. The terms make sense. I'd love to meet with the team. And then we have, 10 to 20 calls a week with interested teams. And then of that, a handful a week, we start writing deeper investment memos on, ask further due diligence questions, and then get to a potential stage where we present to our investment committee and we discuss investment. So I sit on the investment committee. A few of the folks I mentioned earlier sit on the investment committee, the early investors who are part of our parent company, and a lot of smart folks. So that's really the process, and any one investment could be in any part of that process. So day to day is a lot of networking, trying to find new deals, and then analyzing the deals that are in the pipeline. The one nuance I would add to that is if you are in crypto, you certainly, you're somewhere in the fund life cycle. So for the fund that we currently are investing, we're at the end of that life cycle. So we're getting to the end of our deployment. So it's now time to start raising our second fund. So that's where you start to say, like, how do we set up a fund structure? How do we market this thing? How are the contacts we need? How do we meet with potential limited partners? So yeah, a lot of different things. Day to day.
What would you say is the best investment you made and the worst, if you can?
I would say it's really hard to say what the worst investments would be. I would say the qualities of each one of those things. So the qualities of a good investment are verticals that we are excited about. So decentralized physical infrastructure is one that we're really focused on.
It's cool. Yep.
Yeah.
Shout out Koi.
Yeah, exactly. Koi are one of our portfolio companies that, you guys work with as well. We help coin the term when I was at Messari. I love DePIN as
you helped coin that term?
Not personally. I was there when we were batting around proof of physical work and all that. I think
that's so cool, man.
What actually happened at the time was Selkis put out we all hated the proof of physical work acronym. And I think it was maybe TIPIN or something. It was like proof of physical work and something else. So he put out a poll on Twitter and we went through all the responses and we're like, all right, let's see if this one works. Like negotiate, like talk about it in our Slack. And I remember saying at the time, like, guys, we can't just recoin something, like, which I was completely wrong about. So it just took off, which is great because I think it's a much better word than we had before. But so what were the quality? We like DePIN because it's very clear what the advantages are on the supply and demand side, and the need for a token within those. It helps distribution for those who are looking to get it. If on the demand side, and if you're trying to offer up something to the network, whether it be compute or sort of wireless or whatever it is on the supply side, you're getting tokens. You have clear demand. You have clear utility there. DePIN we love. If I like an investment in DePIN, what are the things that get me interested in it? I'm looking at, is this a real, actual differentiated investment versus the competitive set? Or is this just a copy paste of a million other things? Do they have a clear go-to-market plan? Do they have the right folks like yourself with the ability to actually execute on the market plan? Do they have the right team in place? Has this team exited before? Have they shown the ability to pivot before? Do they have sort of an operator's mindset? And to get to that, you really have to do a lot of work to figure that out. You have to have a number of conversations. You have to look at their documentation. Are they building financial models? Are they thinking about plans? Are they looking at hiring? All of the minutia that you kind of get into for an investment. So those are the best kind of investments when you get through all of that and you're like, yes, like this makes sense. I'm going to push forward with it. And they certainly all don't work out. But those are the ones that feel good. The investments that are, I would say, don't feel good are the investments where you sort of go with the crowd. You don't have conviction on the underlying thesis. You're saying like, hey, this is really hot right now. Like whatever, 2021, gaming's really hot right now. There's a lot of great games that are raising that look great on paper. The valuations make sense, but maybe you have conviction that gaming doesn't, takes a long time to actually come to fruition, which has been 100% true, but you invested in those games anyway. And now really that capital has been locked up for 2-3 years when you could have been realizing returns elsewhere. But because you went with the crowd, you were putting those investments and you're sort of tied up capital. So really high conviction verticals we're excited to go deeper on. And then, we're trying to stay away from just following the crowd. But when they align with like DePIN, it's a good thing.
Is there any investment that you saw that you passed on that you regret?
Oh man, there's going to be, I think, a few in the intent space and then a few in the Bitcoin space. But this goes back to like, we have theses we like. So intent-based architecture is going to make on-chain usage much more efficient and easier throughout the Ethereum ecosystem. But there are like, 20 protocols raising right now that have are utilizing that architecture. So which one of those going to win? I'm not sure. So we passed on essentially all of them just because we don't feel like we can pick a clear winner right now. And that's not to say we won't invest in one of them in 6 months, but there could be one that could just run away and we'll miss it. Same thing in Bitcoin. I was looking, I tweeted something the other day. There's 50 plus Bitcoin L2s that are currently in the market raising right now. And that's probably just a subset of them. We've met with a ton of them. And I have such a hard time developing like a thesis why any of them have differentiation from the others. And there's certainly going to be one or two of them that are going to win, and I'm going to be like beating myself up, like, oh man, I should have spotted like the founder had XYZ quality and invested in them, or they had this XYZ partnership and invested in them. But I think there's going to be a lot of wasted capital in those two verticals, but also a lot of ones that I'm going to be pretty pissed off I missed on. And I'm okay with that, right? Like I don't want to miss on something in decentralized physical infrastructure because I feel like we have an edge there because we've been studying the space. And also gaming. Like I feel like we actually do have an edge in gaming because we and our team has looked at gaming since it essentially was tried for the first time on blockchains. And we've invested in a number of games this cycle we think are going to do really well. So Ether Games, Genzio, we just talked about the Shrapnel team downstairs. We haven't made an investment in them, but we've chatted with them before. And a number of others because we think it's finally time to actually have a real game on blockchains, and we feel like we understand where you need to be in that life cycle to actually make a game work and make return for investors. Because again, you can invest in something and you could just waste your capital for a number of years, and that's really what latent capital sitting in investment is, because it can be active elsewhere.
That makes sense. For you, like, personally, like what do you feel like is causing this bull market? If you can, and do you consider us in a bull market right now?
Hard not to, man. I mean, we were
Yeah, I know. I agree. Yeah.
hard not to. I think we were 7% away from all time highs in U.S. dollar terms, and in other currencies, I think Bitcoin actually hit all time highs this morning, which is crazy. But I think so. Yes, I think we're in not a super cycle, but a general uptrend in the crypto industry, and Bitcoin is going to lead that for now. But we're going to rotate into altcoin season, and I think we're just seeing the start of it, really, right? Because we have all the projects that we and our peers have invested in. A lot of capital was deployed in Q3 and Q4, and you're only going to see those projects come to market and have their sort of incentivization programs, whether that's a points program or incentivized testnet, happen in March, April, May, before going live in sometime in that period. Once that happens, I mean, you're going to have all of the money that was made in these Bitcoin ETFs and other sort of vehicles that have been sitting on the sidelines and ready to get back in, see all of that and start deploying to these projects. So I think it's going to be a really interesting spring, really interesting summer, and fingers crossed. I think we're just getting started with this sort of broader investment cycle.
All right, so let's take it back to where we are here today. We're in Denver, beautiful sunny Denver today. What made you want to come to ETH Denver?
I've never been to ETH Denver, so I was excited to chat with a lot of portfolio companies face to face. We've made investments in Koi included over the last 6 months. We made a number of investments, and excited to meet with those teams over the next few weeks. Also to find new builders, new projects, and really just get on the ground and understand what folks are excited about. There's only so much you can see from social media and talking with your peers about what's really developing in terms of trends. Being on the ground is sort of priceless. So excited to do that, and excited to get face to face with a lot of folks.
Awesome. Well, thank you so much for the interview. Definitely make sure to follow Tom on X. He's got banger posts out there. Definitely think a lot of alpha. I mean, we just said like you can actually find a ton of alpha on X, like on Twitter. That's where at least I find a lot of my information. That's where this will be posted. So thank you so much. Is there any kind of final closing thoughts you have?
No, X is probably the best place to find me. If you are an accredited investor in the US, feel free to hit us up. We're raising our next fund, so happy to chat with you there. Same username on Telegram either. If I talk about your favorite coin or haven't talked about your favorite coin, feel free to yell at me.
Don't yell at him. No. All right. Thank you. All right. Cheers, guys.